It's the end of October, and I wanted to take a second to talk about some misunderstandings. Let's call it that. Some misunderstandings about taxes, and as we come into the end of the year, a lot of people get into this mindset of, oh, I should just spend a whole lot of money, and that will reduce my income, and then that will lower my taxes. It's kind of true. Like everything in the tax world, it depends. The thing I want to talk about today is actually the new clean vehicle credit with the Inflation Reduction Act that was passed last year. They redid the credit for electric vehicles. A lot of people who bought Teslas in the last year or so were very surprised to learn that they didn't get any tax credits because under the old credit, there was a manufacturer cap once the manufacturer sold a certain number of electric vehicles. And Tesla reached that. And what Tesla did instead is they actually just lower the price of the car in order to make up for the fact that people weren't getting the credits anymore. But there was some people who didn't get the memo. So there's a new credit. Tesla does again qualify. And so now there's two credits. One is a new vehicle credit, and that goes into whether the materials are sufficiently sourced from the US and whether the assembly is sufficiently done in the US. And then there's a used vehicle credit, which is it's a used vehicle, but it's a new credit. Before it was only the new cars that would qualify for credit. There's also commercial credit, so I'm not going to get into here, but most people are retail personal use kind of buyers. So what I did was I went into the government database, and their stuff was not that easy to use. So I took all their data as of yesterday, and I put it all into a table here on our blog. And you can see the manufacturer, the model years, whether it's a new or used car, and the maximum credit. Depending if for a new car, it might satisfy one test or both tests. If it's only one, they get 3,750. If it's both, they get 7,500. So if we're talking Teslas, Tesla Model 3s, Model X, Model Y, they're all qualify for 7,500. Rivian's 3,750, which actually surprised me. I thought they were more domestic. There's a bunch of Chevrolets, a bunch of Fords. I know a lot of people are big fans of the new Lightning. Those all get 7,500 treatment. The Mustangs only get 3,750, which I was surprised about. And then for used cars, there's a whole bunch of used cars out there. And a lot of them qualify, and they get up to a $4,000 tax credit. So that's all great. However, it's important to know the caveats. Caveat number one, new or used, is it on the list? That's the first thing. And as we come into the end of the year, you're going to hear a whole lot of electric vehicle or fuel cell vehicle or plug-in hybrid electric vehicle salesmen start pitching you and say, hey, if you buy this now, you get a tax credit. So it's really only whatever the dollar amount is. And they do this with cars. They do this with solar panels. Anything that has a tax credit attached. This is the general sales pitch that we see clients relate to us. So things to keep in mind for this one is it on the list? That part's usually okay. Income limitations. If you're a high earner, if your modified AGI, modified adjusted gross income is above 300,000 for a married couple, 225 for a head of household, and everybody else, which is single and married, fired, and separate, 150. So if you're above those thresholds, there's a short phase out, and then you don't get any credit. And another thing is that you have to have actual tax liability in order for the credits to take effect. These are non-refundable credits. So some credits are refundable, meaning even if you don't owe any tax, you'll still get money back. So earned income credit, child tax credit, things like that. Non-refundable credits only deduct from your tax liability that you have. So if you don't owe $7,500 in taxes, whether you paid it up front through withholding or whether you owe it at the end of the year, either way, if you don't have that liability, you're not going to get the tax credit, or it's going to be limited by however much tax that you would owe. And one thing that's critical about this credit that a lot of people will be surprised by is that there's no rollover. Most tax credits, if you can't use it all right now, whatever remains rolls over to the next year and you claim it then, or until some future circumstance. In this one, it's use it or lose it. And if you buy a car that qualifies for $7,500 worth of tax credits, you only have $4,000 of tax liability. You're only getting $4,000 of credit. The other $3,500 just vanishes in the thin air. And whatever sales pitch you were given was leaving out key facts. So I just wanted to go over that and make sure that as you look into your year-end spending, if that's part of your strategy, it's a valid strategy, but it comes with caveats. You have to know what you're doing, and you have to know what your tax picture looks like. If you need help with that, give us a DM or a call or visit our website, and you can book an appointment there, and we'll go over your individual tax situation.